when price stops moving and the other side steps in, if it does, to shut that movement off and starts moving down, all of your levels will be based on a market that is just auctioning higher, is trending higher. And so the levels that sellers believe are unfair may not be the same as the buyers. So anytime you can get a full rotation, low, high, low, and a volume profile, the more accurate this is going to be, because you've got your push from buyers and your push from sellers. And now this includes unfair highs for both of them. I hope that makes sense. Would I recommend, well, we'll get it, Ed Moore, we'll talk about that on Friday. Question is, what would you recommend for the 10-year ZN Treasuries timeframes? I can bring that up and take a look at that. And on Friday, we'll have an opportunity to ask about different instruments too. And the key is when you understand these fundamentals, and you understand some guiding principles and rules of thumb, like thinner volume, you want to make those numbers higher on strong and weakness. You can start effectively, very effectively, start experimenting or simulating or tracking, probably a better word, tracking different instruments and capturing the nuances of the different instruments relative to probe and rotation, strength and weakness, volume profile, etc. All right, so we've got how to build a volume profile. I want to make sure we stay in time here. Again, you want to see levels for a probe higher and lower. That's true with the day as it is with a longer time frame. Now, the other thing I want you to remember, everything, and we'll talk about this tomorrow, everything that you learn about volume profile, all of the elements are exactly the same, whether you're talking about an intraday volume profile or you're talking about a 3-month volume profile. All of the elements are exactly the same. That's why it's important to learn the fundamentals. So real quickly about the market profile, it was the first tool created to help traders see the auction, the buyers and sellers interaction in electronic markets. It uses time as a proxy for volume, just simply because we didn't have the technology to track all the volume, and now we do. So it uses time. It basically says, well, if time spent, if price was here for this much time, then, and it was here longer than any other price, then this must be the most volume. And we know that's just simply not true. But it uses time as a proxy for volume. I consider that to be a weakness. It does not consider or track order flow. I consider that a significant weakness. It's broken up into half-hour segments. It's just something that somebody made up, and not made up like fabricated, but it has been the standard way they've been using it forever. And it is still a very popular trading method. I mean, there are courses out there, and Jim Dalton, who's an excellent trader, I mean, he's a pure market profile enthusiast, and that is what he teaches very strongly. And there are people who follow that and trade using that. I believe that there are elements of the market profile that we're going to go through here quickly that are valuable to us, just simply because some people still use it. So again, few elements of the market profile that are effective elements and effective tools. Specifically, what I'm going to share with you, I want to be really clear that what I'm going to share with you, these tools with the market profile, are specifically for the S&P 500 E-mini. When you start getting into things like gold and oil and the 6E, Forex, there are a lot less traders who use market profile for things outside of the U.S. index futures, and therefore they are less effective. Elements act as reference points with the volume auction tools that we'll be using in the course, and here they are. So what I want you to do is, you don't have to write this down now, but these are the elements of the market profile that we are going to use going forward. First one is called initial balance. It's the high-low range of the first hour of trading in the RTH session. You can also accomplish this with a 30-minute bar chart. Let me just take a look and see if I can give you an example here. If I look at the first 30 minutes of first hour of trading today, I have a low of 1920 and a high of 2550. There are many times when that low or that high, and you're going to see this as we go into examples, there are many times when that low or that high, at that lower high, creates a low volume area. And they are, when that happens, they become unbelievably wonderful setups for trades as a continuation, and I'm going to show that to you. So the first hour of trading in the RT8 session is called the initial balance. Different open types. It identifies the auction at the open and provides context for the day. So part of the market profile, they'll talk about open auction, right? That's and we'll talk about this as we go forward. An open auction is, and it's in the terminology, an auction that opens up and there's trading on both sides of the open. An open drive, where there's very limited trading to one side of the open and strong trading, which we could see in the print and in the momentum and volume clusters to the other side. Open test drives. There are several different times that provide context for the day. And then day types, which identify context for the overall structure and pattern of the market. So these are the elements that we will be kind of taking forward to understand in our trading, because they apply to either identify an area, like with the initial balance, or they help to provide context in market structure. The next one is open and closing swings. Now remember, the auction causes price to move higher and lower as buyer and sellers interact. What I am interested in seeing from the open at the beginning of the day is, what is the first push by buyers? Once I see the first push by buyers and I see sellers start to interact, I want to see how successful and where sellers are willing to take price to before buyers step in. I want to see that opening swing. The opening swing allows us to see the initial push by buyers and sellers. Very, very important for trading to understand where the initial push is. The closing swing allows me to see the final push by buyers and sellers. At the end of the day, as traders are closing their positions and managing their positions, what is the closing swing high? What is the closing swing low? That takes me into and provides context, especially the closing swing provides context in the overnight session. And I'm going to give you a quick example of that. Here's our overnight session from last night. And the Euro session opened up. Price started coming down. This purple line is my closing swing high from Friday. 21.25 was the last push by buyers on Friday. And as price came down, look what happened as it touched 21.25 in the overnight session. I mean, there was further weakness touch here. In fact, you wouldn't have even gotten filled here at 21.25. But a great trade. The closing swing high and low, just in the overnight, they're great levels. But the other thing it does for me the next morning is, if I look at my opening swing high or low, it just gives me a sense to say, okay, is this overall market accepting a little higher or a little lower from where this ended last night? And it just gives me a sense for what buyers and sellers might be trying to do in this current day. These swings are not based on time. So some people may say, well, the opening swing, isn't that the first minute of trading? No. The opening swing is not the first minute of trading. And some people ask the question. The opening swing is the first push by buyers and sellers. And even in a probe and rotation chart, if you have a large probe and rotation, you are not going to be able to catch the opening swing effectively, especially on the ES. You just won't be able to see it because you won't have the rotation that enough to show that to you. You'll get a significant probe, you might catch it in a smaller one, but not necessarily because the probe and rotation is not time-based either. This is initial push, and it's marked from the open of the session. So again, I'm going to show you how to do these things. And because the OFA bars are based on overall probe and rotation, I'm going to show you how to do this. I use a simple 2500 chick chart. It's very easy for the ES to mark these levels. It's not that the probe and rotation won't do it. It's just a different level of measure because they're not time-based. And what you'll find is those initial push by buyers and sellers are wonderful reference points very often in the trading day. Again, the closing swing is the last push higher and lower by sellers up to the 4:15 p.m. Eastern time. Again, I use a simple 2500 tick chart. There's only two other charts that I use outside of my OFA charts, and they're not because OFA can't do the job. They just give me a different perspective on the market. When I trade, I want to be really clear about this. When I trade with the OFA charts. I do not use any of these other charts to trade with. I just use them as opportunities to identify levels. That's it. Other important levels, previous day activities represent context. They just represent context for the most recent interests and convictions for buyers and sellers. So things like, I will get into it. The areas are good reference areas, and when I say reference, I mean reference. As we work through a trade plan, I'm going to show you how to incorporate these previous day's activities into a trade plan. We're looking for significant or the majority of confluence, meaning agreement in different levels across different time frames. And when they line up, when these reference areas line up with other reference points, specifically within a volume profile, it adds confluence as potential trade opportunities, so I have more confidence. And again, when price gets to the point where I'm looking to make the trade, my eyes become glued to the order flow chart. Glued to the order flow chart, and that gives me my confirmation to get into the trade or not. And I can't think about it. Once it says, yep, I'm going long, I got weakness at the bid, strength at the offer, I'm in. And I know how to manage it from there. So that's my trade entry. But the levels tell me where I might want to start considering a trade. And depending upon my overall objective, financial objective for the day and my risk tolerance, I'll know where to likely manage that trade to or where to take my stop. So things like previous day's high, previous day's low, previous day's close, settlement. I know you guys use that a lot. A naked VPOC. A naked VPOC is a previous day's VPOC that has not yet been touched in a subsequent cash session, RTH session. So, for example, when I look at this chart, I see on the 30th of July that we had VPOC up here at 64.75. And then we gapped lower, and the market moved lower. And we have not yet touched this VPOC. That's a naked VPOC. The relevance and importance of this VPOC is if we start breaking through this level, specifically 56.50, and we have a scenario in the print where I have momentum and I can see strength at the offer coming through this level, I know I'm taking a long on a pullback at around 58, and I know where my target is. My target is right there. I say 50, yeah, at 65. At 65.25. 56 to 65.25. That's my target. And I'm going to look to take a scale right in front of that area because the probability of price going back and at least satisfying that VPOC is very high. And what I'm going to start doing, I'm going to take some off in front of that VPOC, and I'm going to look to see what happens to buyers and sellers at that VPOC. There are a lot of times in a day where price will come back to that VPOC, tag it, or one tick shy, and turn around and just fall. So these naked VPOCs become very important levels because once you're back up in that area, price gets back above that 55, 75, 56 level, that is my target. And so what that helps me do is I look at the print, I look at my target, and as long as the print continues to confirm that price is moving up, then I can keep my target where I need to. And that's, potentially there a 5-point trade. So naked VPOCs, the other one is naked closes or settlements. So a previous settlement that has not been touched in subsequent cash sessions. And all these are levels. And we're going to identify these levels, and we're not necessarily going to trade off them, but we're going to identify them as opportunities. Remember, what we're always looking for is strength and weakness of the buyers and sellers and what they're trying to do in any given market. The most important market is the day we're actually making the trade. So we've been going on for a long time. I've given you a lot of information today. Like DB said, this will all be recorded. What kind of additional questions, and I think there are some here, what kind of additional questions do you have? We can go through them.
I just wanted to bring up that I did post a link that is, if you scroll up a little bit, there's a course glossary. That's available on the course page where you guys logged in this morning. So, if you get kind of wrapped up in some of the terminology and you want to scroll through it and find something, it's all there for you. So try not to get overwhelmed. For a lot of you, this is, you're familiar with some of the basic concepts or very much in depth. I saw some people posting stuff about market profile. But if this is new to you, don't get overwhelmed with the terminology. There is a glossary for you, and of course, you can always, make sure and follow up with Mark as well.
Yeah, and I think you all have my email. And DB made one comment about this whole course. He said learning to customize. If there is a subtitle to what this course is about, it's about learning to customize. It's about learning to read and get context of any market. And again, I don't mean that as a one-size-fits-all tool, but understanding how to architect and how markets are structured and how that structure creates areas of opportunity and probabilities for targets and things of that nature. So learning to customize so that you can become kind of your own trading guru. So you can become your own teacher in a sense. And the goal is that you don't need anybody else but the market to teach you what you need to be taught. You just need to know how to read it, and you need the tools to be able to read it, and that's what OFA provides. And real quickly, we're looking for 23. The most logical place for price to go is VPOC. Remember, there it is, and now we want to see what happens at the bid and the offer. This strength here, this looks like we may get what's called a neutral day, which means we're going to see probability of price even moving higher. At some point, I'm still looking for 32 as a potential level, but we'll see. Let's see. Question: is that on a half-hour basis, or it's the market profile is half-hour basis? I really didn't want to spend a lot of time on market profile. I wanted to give it its props relative to it was the first attempt at trying to identify the activity between buyers and sellers in an electronic auction. Once the open cry pit sessions were eliminated, and you couldn't read hand signals anymore or look across the pit and see when big players were buying and selling. Excuse me. At that time, and everything went electronic, you had to be able to identify. You had to be able to identify what buyers and sellers were trying to do, and the market profile was the first attempt at doing that. Given the data that was available at the time it was created, it did a very good job. The tools, the data that are available to us now are so much more advanced and easy to use than were available at the time market profile was created. So I wanted to take those things that are still relevant to trading, at least in my opinion that I've seen, relevant to trading, and being able to use those relevant pieces in this course and not spend 3 hours or 4 hours going through market profile. Because I think that personally, I think that it's a great tool for structure, not necessarily the best for specifically identifying trade opportunities and entries. Other people may have different opinions, but I wanted to make sure we just looked at the critical elements. I don't know when the, DB says he'll send out an email to know when the recordings have been published and the link to that. On my 6-4 structure chart, do I have to draw the VP every day? Good question, Jim. This is what I like to do is on this 6-4 chart where I'm just using the RT8 sessions, yes, I draw the volume profile every day. I started at 8:30 because that's when this chart starts to collect the tick data and the print data, and I start this profile from the beginning of the day. And the reason I do that is because the RT8 session can just be different than the Globex, and maybe not by much, but it's enough to make some levels much more specific for me. So this one I start every day. Yep. And it's so easy to do. I mean, it's so easy to do. And with the toggle right up at the top, I mean, the only thing you could do is have the tool system, I don't know, maybe write it for you. But that's what I do for that session. So you would not even look at market profile, just at volume profile. That is correct. When it comes to trading, there's element of the volume or market profile, which is the IB, the initial balance, the first hour of trading, and you can do that in a standard 30-minute chart. There's an element of the of that I use, and the open types and day types are just really good, quick summaries of what the market's trying to do at the open and to identify in a nutshell overall structure of the market. So I use that terminology at times, but nothing replaces volume. And I will tell you this, as you start to look outside of the ES, and most people who teach market profile teach it relative to the ES because there's so much volume. If you try to start using market profile outside of ES for trading, it becomes infinitely more difficult because the rest of the world doesn't necessarily use market profile. And in more global markets like oil, gold, Forex, it becomes even less of a relevant tool. Again, outside of things like open type. At the open of any market, I don't care if you're looking at the Euro, US, Forex, I still want to understand when that market opens in Europe. That session opens. I want to know what the first push is by buyers and what the first push is by sellers. That's going to set my context for that session. And then I'm going to start looking at the auction around those areas, and that's going to help me start to identify trades. It's going to help me build structure for the whole session. So those things are important. If I see at the open on oil, for example, the market shoot higher and the volume profile, and it comes right back down, the market profile shows really thin volume in that profile, and we're getting acceptance lower, then that is likely an open test drive. And then I'm just looking for confirmation in the print that it's a failed open test drive, and I'm going to start to look for shorts to the downside. So there are elements that just make sense in the market profile because it's a tool to identify buyer-seller interaction and context relative to structure. It's the same thing with the volume profile. It provides a structure. That structure provides context for what the market is trying to do. Fair price, unfair prices, etc. So I talk about market profile just enough to use what I believe to